Hello everyone. In this session we will be discussing the last part of special purpose subsidiary book, that is journal proper or general journal, and then we are going to look at proper subsidiary practical question. That means in that question we will have all types of special purpose subsidiary books that we have been discussing in part by part, that is purchase book, sales book and other books as well. Now first let us see what is journal proper, as we have already seen what is journal proper in cash book chapter, but still let us see what proper journal journal proper or general journal means. Now after the subdivision of journal into various subsidiary books, journal remains only a residuary book in which only those transactions are recorded which cannot be recorded in any other subsidiary book. Now means for cash transactions we have cash book to record it in. Then for credit purchase we have purchase book, credit sales we have sales book. Then all the other transactions which we cannot record in any of the subsidiary books, those transactions are recorded in journal, and that journal is nothing but our journal proper. Now let us see what are the transactions that we record in journal proper. The first one is opening entry, means if we have any balance of previous year's assets as well as liabilities, those things we will bring in this year, financial year, and we will pass journal entry. That entry is known as opening entry. The next is closing entries. At the end of the accounting period, we used to prepare trading and profit and loss account, and through that we find out how much amount of net profit that we have earned in financial year. So for this purpose the nominal accounts have to be closed by transferring these balances to this account. Means when we prepare trading and profit and loss account, we will get our net profit, and that net profit also we have to pass journal entry for that. So that is known as closing entry. The next is transfer entries. Transfer entries are passed for transferring an amount or the balance of one account to another, such as transferring the balance of drawings account to capital account. But this transfer entries we hardly used to come across. Okay, the next is adjustment entries. At the time of preparation of final accounts, that is our trading and profit and loss account, entries are needed to record certain unrecorded items such as closing stock, outstanding expenses, prepaid expenses. So all these kind of entries also we used to pass journal entry, and that is known as adjustment entries. Then rectifying entries. Suppose while preparing our final books, if we have made any mistake, then to minimize the error for that wrong entries, we will pass one rectifying error. This you will understand when we will solve trial errors. Okay, that is separate chapter. Then there are miscellaneous entries. You can give a reading to these points. Now let us see one journal proper question. Now on March 5, Sunil, who owed us 50,000, was declared insolvent, means he became bankrupt and was declared insolvent, but he paid only 40%, remaining 60% he cannot pay us. So for the 40% that we received from him in cash, for that we will pass entry in our cash book since we have received cash. But for the remaining 60% that he is unable to pay us, that we will pass journal entry as our bad debts to Sunil, and amount will be 60% of 50,000 is 30,000. Then next on March 10, an old machinery was sold to Kailash for 10,000 on credit. If we have sold that machinery for cash, then we would have received cash and then we would have recorded it in cash book. But this machinery was sold on credit, and this machinery is not our good, it is our fixed asset that we have sold it. So this entry also we will record it in journal proper. So the entry will be Kailash debit to machinery 10,000. The next is proprietor withdrew for personal use cash 10,000. Now for withdrawal of cash we can record it in cash book, but withdrawing goods, we cannot record it in cash book, neither in purchase book or sales book. So for withdrawing goods of rupees 4,000, we will pass journal entry as drawings account debit to purchases, because he withdrew goods. So we will write to purchases account rupees 4,000. Then goods worth rupees 40,000 was destroyed by fire. Now this transaction we cannot record in any other subsidiary book. We have to pass journal entry. Loss by fire account is our nominal account, and according to the rule of nominal account, debit all the expenses or losses. So since it is our loss, we will debit loss by fire account, and since we lost purchase goods, we will write to purchases account 40,000. Then next is insurance company admitted a fire insurance claim of 25,000. Now remember, they have admitted, they have not paid yet. When they will pay the insurance amount, that time we can record it in cash book, but this one they have just admitted. So for admitting claim, we can write in journal proper insurance company account debit to loss by fire account 25,000. Then next is a bills receivable for 10,000 endorsed to Mr. Mehta. Now we had one bills receivable worth rupees 10,000, but we had to pay to Mr. Mehta. So instead of paying cash, what we did is that we gave that bills receivable worth rupees 10,000 to Mr. Mehta. Since we haven't paid cash, we cannot record it in cash book. So we will write Mehta debit, because he is the receiver of bills receivable, and bills receivable is going out from our business. So we will credit bills receivable account 10,000. Then next is wages outstanding for March 2010 15,000. It was previous year's wages that became outstanding. We haven't paid yet, so we will pass journal entry wages account debit to outstanding wages account 15,000. The next is insurance prepaid, means we have paid insurance in advance this year worth rupees 2,000. So since this transaction is related with next year, we cannot record it in cash book. We will pass journal entry as prepaid insurance account debit to insurance account 2,000. Now you have to understand which entries will be recorded in which subsidiary book, and if you think that if any particular entry you cannot record it in cash book, purchase book, sales book, purchase return book, sales return book, then those entry or those transaction will take part in journal proper. Now let us see one practical question, that is question number 9 in your book. Now in this question we have to prepare different type, means all the subsidiary book. So let us see. First we have on January 1 asset as well. Assets is given cash in hand 8,500, cash at bank 1,40,000, stock of goods 2,20,000, due from Manohar Lal. That means we have to receive 30,000 from Manohar Lal. From Deepjan we have to take 24,000. Then furniture and equipment we have 3 lakh. Now for this is known as opening entry, and as we have just seen in journal proper that opening entries are recorded in journal proper. Now here is your journal proper. So in question, cash is given 8,500, then bank is cash at bank is given 1,40,000. Since these all are our assets, we will write in debit side stock 2,20,000. Manohar Lal, he owes us 30,000. Then Deepjan also owes us 24,000. Then furniture and equipment account we have 3 lakh. Then in the next part of question we can see liabilities given due to Sunil 15,000. That means we owe him 15,000. So in liability side we will write to Sunil account. Since clearly we can see that our asset amount is more than our liabilities, that means the balancing figure will come in the credit side, that is to capital account. So you add all these 6 items, deduct 15,000, then you will get amount of 7,07,500. That zero is not that much visible, but it is 7,07,500. So this is known as opening transaction. Okay, now let us see the next transaction. Withdrawn from bank 20,000. Now this withdrawal of cash from the bank is for office purpose. We are going to assume that this withdrawal is for office purpose, so that means cash and bank accounts are included. That means it is a contra entry. But before noting down any amount in cash book, first we have to write balance brought down. In cash book we used to see we had to write balance brought down. Okay, so wait. See, in question we had balance brought down. That means we had cash amount of 8,500 and bank 1,40,000. In here you can see, in here you can see in assets we have cash in hand 8,500 and cash at bank 1,40,000. This is nothing but our balance brought down that we are going to write in our cash book. Okay, then next for contra entry, that is withdrawal from bank, we will pass entry in cash book. On debit side we will write to bank account, because when withdrawing from bank, this is receipt side, we are receiving cash. Okay, so 20,000 in cash column, and in credit side, since it is a payment, we will write by cash account, and who is paying that 20,000 of amount? Bank, so we will write in bank column. Then next transaction we have on 4th January, paid salaries 22,000. That means we paid salary in cash, so we will write by salaries account 22,000 in the cash column. Then next we have sold goods to Surya Narayan. Since they haven't mentioned whether we sold goods on credit or cash, we are going to assume that we sold goods on credit. So every credit sales we record it in our sales book. So this is our sales book. Since we don't have GST in this question, we are not going to add CGST, SGST and IGST column. So we can directly prepare sales book like this. We will, in first column we will have date, that is January 6th. Then next, name of the customer. So first one, customer is Surya Narayan. Then we are selling him 60 meters silk at the rate of 150 per meter, that is 9,000. Then 100 meters of cotton at 70 per meter, that is 7,000. After adding we got 16,000. Then there is trade discount of 12.5%, that is, or you can say 25 by 2%. So 25 by 2% of 16,000 is 2,000. So after deducting trade discount, altogether we sold him 14,000 worth of goods. Then next transaction we have on January 8, Surya Narayan, he returned 40 meters cotton. See, earlier we sold him goods, now he returned us some goods. That means it is sales return. So we are going to prepare sales return book. So in here we will write January date, then name of the customer, then details of the goods that he had returned us, that is 40 meters of cotton at 70%, 70 per meter, that is 2,800. And while we sold goods to him, we provided trade discount. While returning goods as well, we have to give him trade discount of 12.5%, that is 350. So altogether he returned us 2,450 worth of goods. Then now next, let us see the next transaction. Receive full payment from Manohar Lal by check. That check was sent to the bank and discount was allowed of 3%. Now who is this Manohar Lal? Now when we see in our asset side, we will see 30,000, means we had to receive 30,000 from Manohar Lal. So instead of paying 30,000, he paid us some less because we gave him discount of rupees 3%. Since he paid by check and we sent that check to the bank, that means we are going to receive amount in our bank. So that means for this we have to pass journal entry in cash book. So since we are going to receive, so we will write to Manohar Lal rupees 29,100, because we have to calculate 3% discount of 30,000, and 3% of 30,000 is 900. So after deducting 900, we got to 29,100 from Manohar Lal, and for providing discount we have to pass journal entry, discount allowed account debit to Manohar Lal rupees 900. Then next, on January 10, purchased from Ganga Prasad. Here we are going to assume we purchase goods on credit, so we have to record it in purchase book. So purchase on January 10 we purchase goods from Ganga Prasad. Then the details of the purchases are 300 meters cotton at 60 per meter, that is 18,000. Then 500 meters silk at 120 per meter, that is 60 per thousand. Then we provided 10% of discount as well, so we will deduct trade discount of 10%, that is 7,800. So altogether we purchased goods worth rupees 70,200. Then next we have on January 12 sold goods to Vinita for cash. Since this is a cash sale, that means we are going to receive cash of rupees 16,000. That means we are going to pass entry in cash book to sales account 16,000 in cash column. Then next accepted a bill. Bill means bill receivable for 25,000 for 30 days drawn by Ganga Prasad. Now since we received bill receivable and not bill, means we have to pass journal entry. So on January 13 bills receivable account to Ganga Prasad rupees 25,000. Okay. Then next gave check to Ganga Prasad for 45,000, discount allowed by him 200. Means we gave check to Ganga Prasad, we are going to assume that money will be deducted from our bank. So for this we will pass entry in our cash book by writing by Ganga Prasad. In bank column we will write 45,000. And for discount allowed by him rupees 200, that means it is discount received for us. For that we will pass a journal entry Ganga Prasad debit to discount received 200. Then next transaction we have on January 18 paid to Sunil 14,850 after receiving discount of 1%. Now who is this Sunil? When you see in the liability here, you will see due to Sunil 15,000. That means out of that 15,000 we got 1% of discount. 1% of 15,000 is nothing but 150. So after deducting 150 we paid 14,850 to Sunil. So for payment of this 14,850 we will write in cash book, that is by Sunil account, by Sunil 14,850 in cash column. And for the discount of 1% we will pass journal entry Sunil debit to discount received account 150. Then next on January 20 Mr. Keshav Chand took away 5 meter silk costing 100 per meter for his personal use. Now he withdrew goods. Okay, we cannot note it down in our cash book, we have to pass journal entry for that. So we'll write drawings account debit to purchases. Since he withdrew goods and not the money, so we will write to purchases account rupees 500. Then next transaction we have paid rent by check. So this transaction will be recorded in cash book by rent. Since we paid by check, so we will write 2,000 in bank column. Then next we have received from Surya Narayan 11,000 in full settlement of his account. Now who is Surya Narayan? We don't have any Surya Narayan in our asset or liability. So let us see our subsidiary book, that is purchase book. No, we don't have Sunil Surya Narayan. Then in sales book here, see we have Surya Narayan. We owed him 14,000, means he owed us 14,000. He was supposed to pay us 14,000, but how much he paid us? 11,000. That means the remaining 3,000 is nothing but discount. So for receiving 11,000 we will pass journal we will pass in cash book to Surya Narayan 11,000, and for the remaining amount we will pass journal entry. See 11,000. First let us see subsidiary books properly. Sales book, we sold goods worth rupees 14,000. Then he returned us some amount of goods 2,450. So for this 2,450 we are going to deduct from this 14,000. Okay, now here you can see the working note. Earlier we sold him goods worth rupees 14,000 to him. Then next he returned us goods worth rupees 2,450. So now he is supposed to pay us 11,550, but what he did is that he paid us only 11,000. That means remaining 550 is nothing but discount allowed. Okay, so the receipt of 11,000 will be recorded in cash book, and the discount of 550 will be recorded in journal by writing discount allowed account debit to Suryanarayan of rupees 550. Then next transaction we have on January 27, old newspaper sold for cash rupees 400. That means we sold some old newspaper and we received cash. That means cash book. Okay, to old newspapers rupees 400 in cash column. Then next on January 27 again, paid for stationery and postage 500. That means we paid 500 for stationery and postage. So again in cash book by stationery and postage rupees 500 in cash column. Then next on January 28, sold 400 meter silk at 160 per meter to S.H. Ganesh Chan. So since this is again credit sales, we will record it in sales book. In January 28, S.S. Ganesh Chan 400 meter silk at the rate of 160 per meter, 64,000. Since they didn't mention anything about trade discount, so we will write directly 64,000. Then next we have on January 31, received cash 40,000 from S.H. Ganesh Chan. Now let us pass entry for this receipt of 40,000. Since we received in cash, so we will record it in cash book to Ganesh Chan 40,000 in cash column. Then and also received a bills receivable from him for the balance amount due from him for 2 months. That means he paid us 40,000 and for the remaining amount he gave us one bills receivable. Now how much amount is that balance? Okay, now let us see who is this Ganesh Chan. See here, we sold him goods worth rupees 64,000 as H. Ganesh Chan. Out of this 64,000 that he was supposed to pay us, he paid us 40,000 in cash, and the remaining, that is 64,000 minus 40,000, that is 24,000, he gave us one bills receivable. So for that we will pass journal entry bills receivable account debit to S.H. Ganesh Chan rupees 24,000. Now all the transactions, all the entries have been made. Now it is the final stage of totaling all the accounts. Now for journal proper, it's very easy. You have to just find out the total of debit and credit. Okay, then for subsidiary books you have to do nothing, but for purchases book you have to write January 31st because this is the last date of that particular month. Then in here you have to write purchase account. Here you have to write debit, and you have to find out the total of total amount column. Since we have only 70,200, so we will write 70,200 in here as well. Then sales book, same, you have to write January 31 sales account. If purchases book was debit, it will be opposite, that is credit, and you have to find out total, that is 64,000 plus 14,000 is 78,000. Then next subsidiary book we have sales return book. January 31 sales return account. If sales account was credited, this one will be debited, and the amount is 2,450. Then next is cash book. You have to first find out the cash, debit, cash and bank total. Then from there you have to deduct payments, and you will get your balance carried down. This balance carried down will become balance brought down of your next month, that is February 1st, 58,550 in cash column and 1,02,100 in bank column. So this, usually they don't used to ask this lengthy question in exam, but for your understanding, for your clearing your concept, I did this question again. Now practice as much as you can, and from our next session we will start a new chapter. Okay, so for this session we will wind up here. Thank you.